Hey, everybody, and welcome back to another Personal Finance Friday. Gino, we're talking about inflation today and how it impacts your life. And my question for you, sir, is how much did a piece of pizza cost back in the day at your father's restaurant?
In New York, we call it pizza. Some people call it pie. Pie is blueberry pie. Pizza is a slice, my friend. Remember that.
What kind of slice was it? Was it like a big flopper, or did it have a little crisp to it?
No, it's funny because my kids were talking about yesterday. They went to a good pizzeria place and they said there was grease on it. You need to have a little bit of grease when you eat a slice of pizza. You just need it. You got to watch your shirt. You get a little grease stains. That's when you know it's good. Exactly. Boy, it's bringing back the memories. You know, one of the memories that I had was I remember going into my dad's place and saying, "Dad, I want a slice of pizza." And he's like, "Son, you're going to have to pay for that." So went into my pocket.
No freebies?
No,
freebies?
You're talking like 30 years ago. He's going to college. He's like, "I'm paying for your college, so you're going to have to pay up a little bit." Go into my pocket, pull out, I remember like 2 quarters and a dime, 60 cents, 80 cents for a slice of pizza. That's what it was years and years ago. Go into a pizzeria today and see how much you ain't walking out of there with less than $3
Dude,
for a
it's at
slice
least
of pizza.
$2.99 for a slice, right?
At least. I mean, I closed the restaurant, a couple of years ago, and we were at $2.75, and that's up in, up in upstate New York. So you're talking over $3. So think about it, from 60 cents to $3. What happened? Same slice of pizza, same cheese, same sauce, same person making that slice. What happened to the value of the money, Jake?
So I think that's what we call inflation, Gino. I think there was a decrease in the purchasing power of the dollar. Okay. So what is inflation? Okay, gang. Inflation is an increase in the price of goods and services. And guess what? We're seeing it right now like we haven't seen in a very long time. We saw in May the biggest increase in the CPI, the Consumer Price Index, since 2008. It was up over 5%. Okay. So we're seeing goods and services cost more. What brought this on? What caused this? Well, what we do know is that 25% of the current money supply, the current dollar supply in the U.S., in
How much?
These United States of America.
How much?
25% of the current money supply, you didn't let me finish, has been printed in the last couple of years. So to me, as a rational thinking human being, as an objectivist, everything should cost 25% more. It's as simple as that. Okay. If you bought something and it was $10, it should cost $12.50 now, right? It's as simple as that. And that's why Gino and I were having a conversation about buying apartments the other day and saying, like, if we were buying something at a certain level, a price per door metric, if you will, 2 years ago, really, with 25% more money, sloshing around, it probably should cost 25% more. That's the way mentally we're looking at it, and that's where things are going. The interesting thing is, if a price hasn't increased on something in the last couple of years, there's probably value in buying that right now because it's going up. I mean, it's been devalued. So it's just like, I look at it as inflation as a hidden tax on savers. If you're a saver right now, you save your money and you stack up dollars in your savings account, and you don't utilize it to buy assets, you're getting creamed right now by about 25%. Okay, you are getting whacked. That's a 25% hit on your wealth. So in order to operate in this propped up economy, you need to be an investor that invests in real fixed assets that have fixed rate business debt, fixed rate non-recourse business debt. Because guess what? The dollars we're paying back those super low interest rates with on those multifamily loans, those dollars that we're paying back are worth less, 25% in our estimation. So that's this crazy propped up, paper. What we don't use, it's digitized, propped up currency that we're using now. It's very interesting.
Jake, there's so many rabbit holes we can go down. Let me just peel back the onion a little bit more here.
Yeah.
When you're looking at inflation, certain segments have more inflation than others. Look at the price of lumber. There's a supply and demand issue. When people need lumber to build homes and that's really hot, all of a sudden the demand for that goes up. Prices inflate even more. What happened to oil? The price of oil, go to the gas pump. It was $2 before Trump got kicked out of office. It's average of $3 here now. It's up 50% in 6 months. That is due to the cause of, Trump was printing tons of dollars and now Biden is continuing to print. So all of that is starting to inflate as well. Who wins with this inflation? Jake touched upon a little bit of people. What about if you're a baby boomer who bought a home back in the 1970s and 1980s for $25,000 or $30,000? You did nothing on that home. You paid your mortgage every month. Mortgage is paid off. That home today is worth probably $500,000, $600,000, $700,000, $800,000, $1 million in California. You won just because of inflation. That is an amazing thing if you think about it. Who else wins? The government wins. You know why the government wins? Because they're printing money. They own pensions, right? To all these public union pensions. Those pensions are getting paid back in cheaper dollars, so they continue to borrow. That's an amazing concept when you think about it. Who's winning and who's losing? All the baby boomers that have money in savings accounts. Over $17 trillion in savings accounts right now. Try to actually go and retire off that money. Who else wins? Pick this back. All of these speculative investments, everyone buying crypto and pumping up the value of crypto, pumping up the value of the stock market. The stock market wins big because people are chasing yield right now because rates are so low that we are actually becoming more speculative, and there's no rhyme or reason to it. Price earnings ratio doesn't have anything to do with it. As an investor, look where the flow of capital is going. Flow of capital is going where there's demand. And what happened with this COVID situation over the last 12 months, I went to buy a car about a month ago. Bought the Kia Carnival. Awesome minivan. Got 6 kids, need an 8-seater. Go out and try to buy a car right now. You know what the guy said to me? We get 1 or 2 a week. You want it? Here's the price.
Chip shortage.
Here's the price. Exactly. Price is X. Oh, what's this market rate? $2,900. Oh, market rate. Figure that one out, Gino. Well, that's inflation. Oh, and there was also another technology package, $1,900. So I'm paying $4,500 to $5,000 more for that car because of inflation. That's not a hidden cost. They're actually saying it on the ticker. And you want to negotiate with those people? There's no negotiation. So the inflation takes away your ability to negotiate because they're like, you know what? There's someone else right behind you.
There's a supply problem there.
In every aspect. So and with labor. So who wins with inflation? Labor's winning with inflation because all of their wages are rising. Who else is winning? Jake and Gino with the apartments. If you're in a good market, your rents are rising.
That's the key.
That's very important. So take a look at it. There are always winners and losers. Find out how you can get into the winners column and not, we're going to be stuck in the losers column because we're consumers. We need to consume stuff. Learn the difference between business debt and personal debt. It's very important. If you have personal debt, you're always losing on that end. But if you can get that business debt, and that's why home prices, people are like, whoa, home prices of homes are inflating. But if you're putting cheap, long-term fixed rate financing, 30-year debt on a home, and you're planning to hold this home for 10, 15, or 20 years, and you're paying 2.9%, you're basically getting cheap money on that house. Do you think you're going to pay a little bit more for that? Absolutely. That's what's gone on. So always think of inflation as there's winners and there's losers, and learn how to get in that winners column, Jake.
So let's look at the flow. I'm going to try to bow tie this right now. Put a little bow tie, little bookend on this because it's there's some moving parts to it. We're all consumers, right? My Cheerios are going up 25%. My toilet paper, is probably going up 50% because of COVID plus the inflation. All this stuff that I'm consuming is going up. So how do I hedge, right? How do I hedge against this? Fortunately, we invest in growth markets for our multifamily, okay? Therefore, the rents are going up, all right? So the dollar's worth less, rents are going up. We're able to keep up with it. So our income, the money that's coming in, is rising with inflation. We're not getting held down, okay? We're not getting held down. And on top of that, these new dollars that are coming in are paying off low fixed rate debt. So cheaper dollars that I'm getting more of are paying off a low fixed rate debt. That's how you get ahead in this game. Fixed rate, non-recourse debt in a growth market is really the key to this, okay? You might have to pay a little bit more right now, but that to me is the key to winning in an inflationary environment when investing in multifamily. Gino, take us home.
Now, I wish I could say I'll buy a piece of pizza today, put it in the freezer, and 6 years from now, pull it out and sell it. But you can't do that, right? If you really want to hedge against inflation, just go to jakeandgino.com/apply. You want to learn how to hedge against inflation, learn how to start investing in multifamily. There's so many different ways of investing in multifamily. Go to jakeandgino.com/apply. Schedule a call with our team. And this is one of the ways that you will be winning generational wealth, legacy wealth. There's a demand for apartments. We're becoming a renter nation, Jake. And that's only going to push up asset prices and asset valuations in multifamily. So once again, jakeandgino.com/apply. And we will see you there, my friend.
Thanks, Gino.